Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside in a wave 1 or A, looking for a 3-wave corrective structure to the downside in a B or 2, before then continuation to the upside in a wave C or a wave 3. The common target area for your wave 2 is the 0.5 to the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target area between 61k and 58.4k. The 886 is for a wave B, also still a common target area, and the invalidation for this scenario is price moving below the low here at 56.5k. Inside the target area for 2 or B, we do have some additional support. First of all, the blue box here between 59.4k and 60k in confluence with the golden pocket, and then around that 786 level we have another blue box between 57.9k and 58.3k. As we are looking for a 3-wave corrective structure to the downside in a B or 2, this is what we are looking for at the moment, a 5-wave structure to the downside in a wave A, 1, 2, 3, 4, 5, then a 3-wave corrective structure WXY in a wave B, and a wave C towards the downside. The common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low of A to the high of wave B, giving you a target area between 58.5k and 57.3k. This is in confluence with the lower blue box that I just mentioned here, as well as the 786 area at 58.4k. However, when we look at this move to the downside on the lower time frames, we can count either a finished or soon to be finished 5-wave structure, and we're only at the 0.618 trend-based fib extension, which is a very rare target for a wave C. If we then zoom in to the 50-minute time frame, then preferably in the more bullish scenario, we still see some more downside to enter the weekend when price is over here and finish this impulse. We have a wave 1, 2, 3, potentially 4 and 5 are already finished, but of course in this scenario you would prefer to see price moving towards the downside and moving towards the 1 to the 1.236. Failing to do so does increase the probability slightly for the more bearish scenario, where we are looking for price to continue to the downside and take these lows. Here we then have the same 5-wave impulsive structure to the downside, but this time in a wave 1 or A, 2 or B, and a bigger C or 3 to the downside to take the low at 56.5k. The invalidation for this scenario is price taking out the high here at 63.4k. Now preferably this wide wave 1 is not going to end below the 1-to-1 trend-based fib extension at 58.5k, taken from the high to the low of the blue one to the high of the blue wave 2. And that is because this is a lower degree Elliott wave count compared to the blue count. In blue we have a 1, 2, 3, 4, 5 as the most bearish count here, and then inside this blue wave 3 we want to see the lower degree 1, 2, 3, 4, 5 in white. Preferably, this wave 1 is shorter in time and price compared to the higher degree wave 1 over here. However, if we compare this with the more bullish scenario, then preferably in the bullish scenario, you do see price moving to the downside, ending below this 1-to-1 inside the common target area for a wave C. Failing to do so will add some probabilities to the more bearish scenarios. If we then look at the 2-hour gap, we closed a 2-hour candle here inside this gap earlier in the week. As you can see, the 2-hour gap over here, closing candles inside, increasing the probabilities to fill this gap sooner or later. Move to the upside, now we're back down again. Would be nice to see this gap filled eventually. Low of the gap is at 59.4k, which is in confluence with the blue box that I have over here as well. And if we then look at the probabilities of the different scenarios, then we are looking for a bounce somewhere soon, as we are looking for this impulsive structure to finish. And we do have some support to the downside still, which is not yet touched, and we didn't yet fill the 2-hour gap, which would be quite interesting as well. Now, of course, how low price will eventually go will have an impact on the bullish and the bearish scenario. So we're going to observe what is going to happen this weekend, and also a side note that during the weekend the probabilities are higher for a ranging sideways structure. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.